Hi, my name is Krishali, and I'm super excited to welcome you to the Basic Technical Analysis course. This course is for those who dream to know the perfect prediction of market moves before it happens. It's useful to learn how to read the charts and to understand the numbers. In this course, you will learn trading view, understanding of chart types, time frame, basics of chart analysis, resistance, chart patterns, triangle, cup and handle, double top and bottom, head and shoulder, Fibonacci retracement, Elliott wave theory, 5 plus 3 equal to 8 wave theory, ABC theory, impulsive wave theory. But first of all, it is vital to know what technical analysis is. In simple words, technical analysis is the study of market action with the use of charts for forecasting future trends. We provide the basic details of technical analysis and we provide the best toolkit to become a successful trader. So what are you waiting for? Don't waste your time. Join us in the journey of fortune. Learn it, apply it, and start trading online today. Hi, I'm Krishali. Before starting to learn about trading and technical analysis, you should have Chartlist platform for technical analysis and broker accounts. Let me introduce you to the first and very popular platform, Metastock. Especially capitalizing on technical analysis, it has both real-time and end-of-the-day versions. The second platform on which we will talk is AmiBroker, and the third is TradingView. It will enhance your TradingView and improve your trading knowledge. How will it help you? The main things you need to know in this platform are the left panel and the right panel. In TradingView, you will know about introduction of drawing panel, side panel and the top panel. So let's start to know how to get familiar with TradingView. Here we go with TradingView in the Google search bar. Now you can see the first option. See the first site, that is the official of TradingView. So let's begin. This is what you're gonna see. You can see the whole TradingView homepage with different options. But as you all know, our focus is mainly on the chart option. Here we go. Boom, we have been traveled to the chart. Looks impressive? Not yet. This left-hand side shows the toolbar which contains different charting tools that we use daily, can also be called as drawing panel. Now the right-hand side shows the side panel with various notifying options which alerts and notifies us rapidly. The third one is the top panel that contains tools like indicators, time frames, and many more. Do you want to go deeper? I'm sure you do. Let me tell you the objects in drawing panel: trendline, parallel channel, Elliott wave, Fibonacci retracement, etc. These are some basic tools in the panel. Now you all can spot my cursor on the chart. Let's select the trendline tool from the panel and from the left bottom drag the trend line upwards in the direction of the trend, keep it and set it. Again select the trend line tool and drag the trend line downwards from the point where we have left the previous trend. You have to keep this process of drawing trend lines going on according to the trend on the chart. Now go to the trend line tool and select the parallel channel tool. Parallel channel contains two trend lines which are never meeting at the adjoining point. This simply created the parallel channel. Now if you want to name anything on the chart, select the text tool and drag it where you want to name anything. You will get a dialog box on the screen like this. Edit the text on the basis of the information you want to show. Color and background of the text can also be selected. It's done. What more you could do? Generally, if you need to show any direction or the path, you can use the icon tool from the panel. Here it is. Select any icon, for example, the upward arrow, press the cursor where you want to direct it and set it. You can use these tools to show the trend going on in a perfect manner. Let's move to the pattern tool. Here I am selecting the Elliott wave 1, 2, 3, 4, 5 pattern. Press the cursor like this at the points on the chart. There will be 5 points. Here is your Elliott wave. The next and the very important thing for the traders is the object tree where you can move and hide and again make everything visible on the chart. Here you can also create groups, lock the tools and delete them. At the right hand side bottom, you can see the layered icon which is our object tree. By clicking on it, you will see each drawing tool which you have used on the chart in a systematic manner. Select any one tool. You can see the eye icon on the side. Click on it, the object will disappear from the chart. You can do the same thing to all the tools and make them appear again on the screen by selecting every group on the object tree. All you can do is move the whole structure anywhere on the chart. Seems like magic. You can see the folder plus icon at the top. Select on it. You will get the group name. What you can do is select and rename as you wanna. For example, study 1. You can also hide and unhide the objects of the group by using a drop-down list. Now let's create a new object which is a trend line. The new object is out of the group. The action to make invisible the group of all objects, but this won't affect the new object. As you can see, by clicking on the cross icon, it fades out. You can also cancel the folder which you have created earlier. It will also be gone. The next thing which is important to know is the favorite toolbar. Favorite toolbar makes it easy for you to move ahead quickly on the chart so that you can save the time to trade. The cursor moves and goes to the star. Any wonder what is it? It's my favorite toolbar. When you click on it, you can see a horizontal dialog box appear on the chart. In that, you will be able to save the preferred tools. For making any tool favorite, all you have to do is click on the tool. You will see the star on the right hand side. Click on it, it will be added to your list. You can also remove any tool at any time. It will save your clicks on the mouse. I have already saved the trend line tool in the favorites so that I can use it anytime without going to the drawing panel. It saves time if you count on it. Parallel channel is used frequently. Here I take my favorite tool. Let's dig to the bottom of the top panel where we will see various time frames, indicators and many more things. By clicking here, you can select any instrument you would like to present the chart about. For example, GBPUSD. I have clicked one of them. Here it shows the chart on GBPUSD. This is how it goes in the market. Here I selected the compare tool. With it, we can compare the prices of any two charts. This is how it shows on the screen. Now, if you wanna know the trend of the day, of an hour or any time frame, you can use this tool which contains every time frame. For example, I have selected a 4-hour time frame and you can see the trend of the 4 hours on the chart. You can always change the time frame as per your requirement. Time frame makes it easy for every one of us. If we're supposed to add indicators to the chart, select here and search the indicator you wanna use, such as moving average, RSI, volume. Here I have taken volume as an indicator to the chart. You can add your favorite indicators to the favorite option. We can even hide the indicator like this. The option appears on the left hand side. Can you spot the difference here? Yes, you can. The last one on which we are focusing is the stock charts. It helps to focus on basic and technical analysis with advanced fundamentals to trade successfully. Here we have some examples of more platforms. Hi, I'm Krushali from www.canaryprajapati.com. In this chapter, we're going to learn about understanding charts and time frame. Before we start, we should know a few terms and practices such as line, bar, and candlestick chart. Chart types: line chart, bar chart, and candlestick chart. Line charts. Line charts are special to identify the trend better, the key support and resistance levels, and recognizable chart patterns. Every single point on this line is the close of the previous candle. Whenever you are looking for the closing price at that time, the line chart is the most important. For example, whenever you are working for the weekly chart and you don't want to give an attention to the day's opening or any other price, for example, Tuesday, Wednesday, etc., compared to two charts, you can easily understand it by using a line chart. Let's take an example. You would like to see the relationship of Standard and Poor 500, Dow Jones Industrial Average, and Nifty. You can easily visualize the correlationships among them. I have used threadline, circle, and square to identify the correlation of these three anlaysis, which are easy to see. A line chart is easy to understand and it's simple. Because of its simplicity, traders looking forward to identify patterns or trends may opt for chart types with more information like candlestick. A bar chart describes the display of the open, high, low, close prices for a particular security during a specific time period. The bar charts provide instability information that the line chart lacks. It has the conviction of the buyers to buy and sell in the price range. You can see the candle has open, high, low, close points, and shadow. When the price travels upside, the candle will be shown as white or green, called bullish, but it depends on your chart setting. In this, the first candle you see has body and shadow. An important thing here is the third candle with a tail. When a shadow is more than half of the candle, it is indicated as a tail. When the trend has changed, it is very important that shadow is higher. We will learn more about price action with volume later. The time frame refers to a specified practice when a price action is displayed on a chart. Personally, I prefer looking upon weekly, 4 hours, and the 30 minutes time frame that I'm most interested in trading short term. Looking into multi-frame will create more odds in my trade. For example, first I look at the weekly time frame to clear the bigger picture of trends in my mind. I'll go for a short-term time frame as a 4 hours candlestick time frame and the last 30 minutes time frame for the more tactical opportunity. Long-term time frame, it's usually for investors with a daily, weekly and a monthly time frame. An investor should monitor the major economic trends when following the general trend on this time frame. Short-term time frame. In this time frame, the trades should be executed because the smaller fluctuation in the price action becomes clearer. So it's better for the trader to pick an attractive entry. The strategy to use a multi-time frame is to go one step further towards a successful trade. So suppose you are a long-term investor, you would surely look at the weekly chart, then set up more for the monthly chart. If you are the day trader, first you can look up to 30 minutes, then one step higher. So now you can move to 4 hours and then daily chart, weekly chart. So that's it for now. If you have any queries, go ahead and feel free to ask. First, let's know what the trend line is. Trend line is a series of high and low points that forms a straight line. So let's know how the trend lines are constructed. Trend lines are constructed by linking more than two price points in a straight line. The purpose of creating trend line, it's made to identify the trend of price movement. It's also created to indicate resistance and support levels. Support, in simple words, support is a point where downtrend stops, where buyers purchase and sellers become not willing to sell, and from this point again the price will increase. Resistance is a point where price stops to increase and from where price starts to get decreased. These are the peaks where sellers sell and buyers will not purchase. Resistance and support trend lines. It's the area which shows how the price has moved in the past and can also react in the future. Resistance and support both are important elements in technical analysis. A line which connects at least 2 points of resistance and finds the next point is called resistance trend line, and a line which connects at least 2 points of support and finds the next is called support trend line. Why do we need to draw this? We draw the resistance and support lines to know the possible chances of trade. Let's move to the parallel channel to know how it works. Shall we move to the components of parallel channel? Penetration, gravitational line, and consolidation. The first thing we need to know is penetration, that is excessive. Penetration is an amount of something which is more than advisable. Let's sort this out. A penetration is the area where price runs outside of the channel for a short period of time only and re-enters to follow back the channel. For traders, penetration is a golden chance where you'll get higher reward and lower risk. If you trade after confirmation of penetration, we must know the reason why the excess gets created. When aggressive buyers change their mind, they sense that the decision of buying is not preferable, so they get back to the channel with the help of the gravitational line. So let's dig a bit deeper into a penetration. A penetration is the point where the price crosses the higher or a lower boundary, but the price would not spend much time in that area. We can find demand on the downside and supply on the upside, which flies back in the parallel channel right after they serve from a strong support or resistance level, which indicates the rejection of the price level. Tails are generally confirmation for existence of an penetration. Bigger tail or series of tails are important in the excess area. For example, a larger tail is out of the channel with higher volume, which will have a higher probability of reversal in price. The second component we'll study is the price attraction, which is also called the gravitational line. In general, the gravitational line is a force that attracts price, which is a combination of support and resistance. It's the line where the price spends most of the time. Whichever price goes out of this level gets retraced and touches again, forming a tiny value area just above and below it. It controls the up and down movement inside the line. Consolidation periods as indecisive, where price fluctuates in a smaller range of prices. Let me try to explain to you another word. You have created a channel for a 30-minute chart and then you move for a daily chart. You'll see the channel look like a consolidation area. We'll learn more about breakout after maturity of confirmation and set up trade on it in the next advanced trading course. Last but not the least is tails. This session ends here. Wait for the next. Hello everyone, I'm back with a new topic. Wait, where were we? Yes, the chart patterns. There are 4 types of chart patterns. the double top and double bottom, the cup and handle, the head and shoulder, and the last is triangle. So let's go deeper into it. Let's begin with a reversal term. A previous trend changing into a new trend. Generally speaking, any trend in double top and double bottom are reversal pattern. Double top can be seen as an M and double bottom can be seen as a W. Double top converts uptrend into downtrends, a bearish reversal, and double bottom converts downtrend into uptrend, a bullish reversal. Double top. In the double top chart pattern, there are two peaks forming an M, and here the first peak forms and travels down, forming the new peak. The first peak is the highest peak of the current trend. Here, price is at the second peak and touches the neckline while going down. Second peak declines the current trend and continues to move down. When the price breaks the neckline, the distance between the second peak to the neckline is the same as the distance down the neckline. The first and the second peak are at the same line, which forms a strong resistance level. Double bottom. There in the double bottom pattern, W is formed with the help of two peaks. At first, the first peak is formed which walks down, generating the second peak. Here also the highest of the current trend is the second peak. Second peak travels upward because of rejecting the current trend. When the neckline is cracked by the price, the distance between the neckline to the second peak is much likely of the price moving down the neckline. Here, a strong support level is formed because the first and the second peak are on the same line. You all must wanna know the meaning of neckline. The low points of each peak are ruled in a straight line which forms a neckline. The head and shoulder is the most reliable pattern which helps the traders to identify the reversal. This pattern has three peaks. The middle peak is the head because it's the highest peak, and the additional two side peaks are the left and right shoulders because they are low as compared to the head. In head and shoulder top reversal pattern, the uptrend gets converted into a downtrend. Here, the left shoulder's end point and head's starting point brings about strong support points on the neckline at B and C. It could also be called a support trend line. The right peak's declining line breaks the neckline and moves down to the volume. The head and shoulder pattern is accurate when there is a neckline break. The left shoulder is formed at the end where the volume is generally heavy. For identifying the target, the distance of the shoulder when crosses the neckline is the same as the head. Sometimes the left and right shoulder are slightly different in head and shoulder. Bottom reversal. The situation is totally different as the downtrend gets converted into the uptrend. The strong resistance point are formed because of the left shoulder's end point and the heads start at the points B and C. We can call it a support trend line. The right peak has a declining line that breaks the neckline and proceeds to move upwards. You can identify the target easily as the distance below the neckline, KS, the same as the head. For note, when there is a neckline break, the volume increases in both top and bottom reversal. It's the basic chart pattern in the form of fusion, so it could be seen in the middle of the trend. It basically signals a continuous process of existing trend. The triangle pattern has three main types that are used frequently. Not all triangle patterns are the same, so it's important to learn each triangle theory. It's formed by intersecting two trend lines as the price moves in sideways. The first triangle we're going to learn is symmetrical triangle. It's a composition of the diagonal falling upper trend line and rising of the lower trend line. Diagonal joining of two lines at the corners. The upper and lower trend lines meet at a point, forming a symmetrical triangle. As the price moves to the join point, it will automatically be a fall for the upper trend line on the price rising and lower trend line for price falling. Currently, the second triangle is the ascending triangle. An ascending triangle pattern is a breakout pattern that forms when the price travels out of the flat upper trend line with a rise in volume. The upper trend line could also be called a resistance trend line. It's a bullish formation. The upper trend line must be horizontally straight, which shows the same higher lows, and the lower trend line is rising diagonally, which indicates lows going higher. Here, the buyers are particularly stepping up. In the end, they lost patience and rushed into the security level, crossing the resistance line, which results in more buying. After it, the flat trend line, which was initially a resistance line, now becomes the support trend line. The last type of triangle we're going to learn is the descending triangle. It's the opposite version of the ascending triangle. It's considered as a breakdown pattern. In this, the lower trend line must be horizontally flat. The lows are equal and highs are sloping diagonally down towards the joining point, that is apex. There is a reason to call it breakdown because the price collapses on the lower flat line, which is also a support trend line. Now the lower trend line, which was initially a support trend line, becomes the resistance trend line because the price moves downward. The last pattern is the cup and handle. The cup and handle pattern forms a shape as U as the cup and V as the handle. Simple. Not that. Let's dig more. It's considered to be a bullish signal and especially used to identify buying options. As mentioned earlier, the shape of the cup should be rounded, yet if there is a shape like V, the deeper one, I advise you to avoid it immediately. The cup shows the signs of the bottom as it has bounced back from the lows and goes higher towards the resistance level. The handle is a tight merger formed under resistance, a tip. The best cup and handle has the shallow retracement on the handle. After the high points are formed on the right side of the cup, there is a pullback that forms the handle. The whole handle is 1/3 of the cup. It extends an uptrend and is used to detect alternatives to go longer. The maximum time in which it can be held in 6 months, rarely any longer. It takes a longer period of time to form, and only if you have a high patience level.